So, Bethany, thank you so much for being on today, our guest expert. I'm so excited about what we're going to talk about, which is basically how to buy a home, maybe your first home, and have someone else pay part or most of your mortgage payment. Because one of the biggest things that people are struggling with right now, especially in Colorado, is affordability. And so they think they can't buy a home at all, and especially not any kind of investment property because there's no way they could afford it. But I know you're going to talk about ways today that maybe they could get in with almost no money out of pocket, maybe, and
Mhm.
have it half to, more of their mortgage covered. So I'm really excited, but first I want to ask you a little bit about you. Like, tell us about who you are, why you're in this industry, kind of your story, how you got here, some of your struggles and wins, maybe. Just tell us a little bit about you.
So I am originally from Texas. I hope no one faults me for that. So that
I'm
if
from
they,
Texas.
oh, that's right. So I think, I think we're good. Sorry, we're not trying to take over, but here we are. Um, so I've actually been in mortgage for about 20 years. I think this year may be right at the 20-year mark. So if not, a little bit longer. And it's crazy. When I graduated as a junior, I was living overseas off and on my entire life, and so I was at an international school, and I was not feeling going my senior year. I was kind of over all the having fun and coming back to the States. I really wasn't gonna know anybody anyway, so I decided to go to college. Had no idea what I wanted to do. I really thought being a marine biologist would have been cool.
Yeah, it would
I
be.
hate science.
Me
So
too.
that's not going to work. So then I said, I think going into some sort of business, I had this dream that I was going to be the CEO of some Fortune 500 company living in Chicago, Illinois, which I have no idea why I picked Chicago because I'd never been there. And I was going to live in a penthouse downtown, and I have no idea what that company was, but that's what I was going to do. Never get married,
Awesome.
never have kids.
That's awesome.
Yeah.
And then life happens.
Life happened. Yeah. So I have three kids. I have twins who are 20, they'll be 24 next week.
Oh my God.
They actually live in Wisconsin, which is great. They love it there. They were not a big fan of the dryness here or the heat in Texas. So they are up there where they're thriving. And then I have a about to be 15-year-old, all girls. And they are all very different. And I love every one of them. And so they're the kids. And I kind of fell into mortgage. I always tell people when I'm hiring loan officers or working with people in some capacity, nobody wakes up one day and says, I want to be a mortgage officer or loan officer. Never.
Hmm.
You fall into this job, you either love it or you hate it. There is no in between.
Yeah.
Um, I happen to love it. I knew from the minute that I started that my personality worked really well in this industry. I love people. I am very empathetic. I like watching people win. And even
Hmm.
some of the folks I couldn't help right away, I have found ways to keep them motivated and show them, hey, it's a no right now, but that doesn't mean it's a no like forever. Let's do these things and get you in it. And there's been plenty of times where I've been at closings of people that never thought that they could own a home. When I first talked to them, I wasn't sure we'd get them there either, but we did.
Yeah.
So, I think real estate is such a cool thing. It's not something that changes as much as some other industries. I think that there's a lot of opportunity there to teach like what you're doing. So I really
Mhm.
appreciate you taking this opportunity to teach so many people about things that even I didn't even know whenever I started out. So I'm excited to be able to help maybe someone else become a millionaire. And when they do, then they can call me and I will come hang out on their yacht.
Yeah,
So
exactly. Exactly. No, I love all of that because I think we have so much in common. I also graduated a year early from high school because I was like bored
yeah.
and went to college and had no idea what I wanted to do. I was so blessed because I had a great aunt who established a college fund for a bunch of my cousins and so I didn't have to pay for it, I didn't have student loans, but I felt like I was wasting it because I didn't know what I was going to do. And I remember when I was a junior in college, the counselor was like, "Hey, you need to declare a major." I was like,
Yeah,
I don't know.
yeah.
So yeah, so I didn't, real estate was never something I thought about either when I was younger. But it's the one thing that's kind of kept my focus with ADD. So
Mhm.
everything changes, every deal's different. And so it keeps me excited. But what I love most about it is, like you were saying, like teaching, being able to figure things out for people that they never thought they could do. When we bought our first home, was a while ago when homes were a lot
Yeah,
cheaper. We never ever thought we'd be able to buy a home because we were coming off of a bankruptcy 2 years before.
right.
We literally never thought we'd ever be able to buy a home. And we bought a home and we've since owned several since then. So there's a lot of different ways to get into homes, to own a home, to turn your home into an investment property or not, or there's all sorts of different things. And one of the buyer I just closed last week, we worked together for over a year to get him pre-approved because there was some different things in his story that he had to work on, and then we also had to find the right lender that could get it done. So I hate when people feel helpless and hopeless because if if you as a buyer are you have a goal and a dream, if you're willing to work at it, a lot of times we can partner with you and make it work. Maybe not now, but at some point.
Mhm. Yeah,
So
and I think that's definitely something people need to realize is there is always going to be an opportunity. There is something out there for you. It may take a little bit of work on your part, and there needs to be some skin in the game, but that's what we're here for. We're here to guide you and get you where you need to be. So,
for sure.
yeah.
All right. Well, tell me, like, do you have one, like a favorite story of a buyer you were able to help?
I do. So I had a buyer that called me. It was actually an escalation that came to me. I was a sales manager, and we couldn't find an approval. We couldn't get AUS to run, which is our automated approval system. We run those typically before we even get the files to underwriting. Playing with all the numbers, the rate would have had to get bought down to something super crazy. Credit was not good. There was just a lot going on. So they were very upset. They didn't understand the whys behind it. And they ended up on my desk. And I spent probably a good hour on the phone talking to them and relating to where their situation is. I can tell you, I hate when someone says to me, I understand how you feel, because you don't. You have no idea how that person feels. And I was not about to try to tell that person the box answer. I understand how you feel, but however, we can't help you. There
Mhm.
was something about them that I just felt really connected to. I teared up a little when I was talking to them because you could just hear the desperation in their voice. And so, long story short, because I don't know how to do short stories,
Me either.
long story short, it took probably about 8 months. I talked to them on a regular basis. Sometimes it would be once a week, sometimes it was once a month because they had stuff to do. And there was things that I couldn't do with them until they had gone through these steps.
Mhm.
And they would say, "Oh my gosh, we just got our update from the credit repair place, and our score is here now." And I was like, "Great. Now let's focus on all that money that you've been able to save over here. Now let's start paying down some of those debts."
Mhm.
So slowly but surely they got there. We were able to put them into a brand new home. We were able to get them some amazing incentives, and buy their rate down. And it wasn't like super fancy. It wasn't like upgrade central, but it was a brand new home in a brand new neighborhood. And they sent their pictures to everybody. And
Oh,
yeah, I have goosebumps talking about it. It was
yeah.
just, and that right there, I use that as an example for people who want to come into this business and people that I would hire that were new to the industry and say, I want you to see this because this is more often than not why we do what we do.
Yes.
There's yucky stuff, and there's people that we deal with that aren't that amazing or that don't feel that good all the time. But
Mhm.
these are the ones we focus on, and these are the
Absolutely.
ones that keep us going.
Absolutely, absolutely. It's so good when you get a win and it's not for you, it's for someone else. And like you say, you get so teary-eyed and so excited for them. It's just, yeah, it keeps you going. So that's
Yeah.
awesome. Thanks for sharing. So
Yeah.
tell us about um like if I was calling you and I'm just, I want to buy a home. I don't know what I can afford. I don't really know, where my credit needs to be. How much money do I have to have? Like, where would I even start?
I had that phone call this week. I was like, okay, tell me about what you're thinking. And they're like, I have no idea.
Hmm.
Um, that's why it's really important for people like me, and people in our industry to understand the programs that are out there and to ask the questions to get an idea of where that person is at.
Yes.
You can learn a lot about asking, what they do, where, what they like to do for fun. What do you currently pay in rent? Oh, you don't have rent right now. Okay. So, and then start to get into some of those money questions. And then you back into a situation. I always start after I have those conversations and I back into something, I'll start a little higher just to kind of, I don't want to start too low and then they get excited and then we have to make those adjustments. So I always start high and then move my way down.
Hmm.
So that's what we did with this one borrower that we had this week is I started a little higher and I said, okay, you're paying this much in rent. You would like to stay around that. Here's what that would need to look like for you. Um, if you wanted to be a little bit more outside of your comfort zone, this is where I can take you.
Hmm.
The other thing to keep in mind with first time homebuyers, especially, is understanding where all those numbers come from.
Hmm.
When you tell them that your ratios, your debt to income ratios, need to be at a maximum of 50%, that's based on your gross income. So that's not even take home. So keeping them, updated with that and keeping that number in their head so they understand it. Because if you are like, oh yeah, I can afford 50%, that's not a big deal. Well, that's 50% of the money that's going to have another 50% from taxes and benefits and all the
Hmm.
other stuff. So let's talk
Right.
through that. So
Yeah.
we will start we'll start with that bottom line number and then we get into how much do you have to spend as far as cash to close because then that helps me decide what programs we have.
Right. Right. And so I sent a buyer to you this week,
Mhm.
and she was like that, like, where do I even start? Like, should I qualify on my own? Should I have a co-signer? What are my options? What can I afford? Because when she contacted me, she had her heart kind of set. Luckily, we didn't go see it on a home that was like $600,000. And which was great. Like I was excited for her, but we needed to have those conversations to see like what can we afford and be comfortable with and not be house poor. And so I know when you started those to take over those conversations and what does it look like? So I know that she ended up being able to layer some programs maybe. And so
Mhm.
talk to me about like what's down payment assistance? Like a lot of home buyers don't even know, they don't know that the difference between that and their closing costs or how much is all this going to cost me out of pocket. Um, you know, uh, it is, I don't know, just kind of start from like where you would start and let's just use like a pretend scenario.
Okay. So for a down payment assistance program, Colorado actually has several different versions of that. The big one that most people use is from an agency called CHAFA. That is the Colorado Housing Authority. So they offer several different versions of down payment assistance. They've got programs for true first-time home buyers who, have never actually, it's 3 years, so you could have owned a home a while back ago and you could still get it. There are some programs for people who are not first-time home buyers,
Hmm.
but they have certain criteria that they have to meet. There's
Hmm.
a really cool program called First Generation, which if you're the first generation in your family to ever own a home, then you can qualify for even more benefits. So there are so many different things that we look at. There's tiers. So I always start with a conventional loan. I love FHA loans. I have an FHA loan. I think there's a lot of benefits to FHA, but for their tiers, they have 2, 3, 4, and depending on the program, you can go up to 5% down payment assistance. One thing I want to make sure that customers are aware of when we go into that is just because they have those available does not necessarily mean that that program makes sense for you,
Mhm.
because there are rate tiers, which means your payment could be higher. Even though you're getting that money help for your down payment, your payment could still end up being higher.
Mhm.
So there's a lot of different things that we look at. But all in all, if you have the ability to use the first time home buyer programs, they are pretty, most of them are pretty dependent on income. So they're meant for people that don't make a lot of money and
Yeah.
probably don't have a lot of money to spend.
Yeah.
So that's where we focus the most.
Yeah.
People that make tons, and we look at that from county specific. So certain counties, if you make $150,000 a year, that doesn't mean that you don't qualify. It could be for Denver and Douglas County, for example. That is below what they consider the average, median income.
Yeah. So these programs are specifically for people that need like a hand up to get into a home, but
Mhm.
also a hand up doesn't necessarily mean you make $50,000 a year. You can make, quite a bit of money and still need help buying a home. So let's say that I want to buy an investment property for my first home. A lot of people don't know that you can use some down payment assistance programs to buy an investment property. And when we're talking investment property, usually we're talking about, um, something that I'm buying to live in, and then there's another unit, whether it's downstairs or upstairs or side by side, like a duplex. But a lot of people don't know that they can use down payment assistance to purchase an investment property. And usually, well, tell us the limits on how many units we can get and kind of what parameters we're looking at as far as like credit score or down payment or how much we need to make. Like, what is something like that? Where would we start?
So this was something I didn't even really know about until a few years ago. And so when I found this out, I was like, genius. I wish I would have known this.
Yes.
Yeah, so you can absolutely buy an investment property for your first home. The thing to keep in mind is we do have some people who would rather rent and then buy like an investment, like a few condos or even a duplex to rent out to other people. That is not what we're talking about right now.
Right.
What we're talking about right now is you need a home you want to own, but you also want to have that potential for additional income and
Hmm.
then future income to help you grow your wealth. And
Yes.
that's a big thing that a lot of people don't understand that they have access to.
Right.
Um, so I did run a few numbers and looked at a scenario or two.
Yeah.
So we're gonna talk about Bob. Bob Smith, he calls me and says, I have this much available. I don't really have, I'm not looking for a huge single family home. I don't really want to keep up with all that. I'd love to be able to create some wealth for myself and then eventually to be able to pass on to my family. And I
Mhm.
said, Bob, that is the smartest thing I've heard in a long time. So let's talk about numbers. Let's see where you're at so we can figure out what programs work. So Bob has a credit score of 623. 623 is, on average, I would say a lot of people in this country are in the 600s because of the affordability factor and having to live off credit cards and all that fun stuff. So
Yeah.
just because you have something that's 620, in that realm does not mean that you cannot get a loan.
Hmm.
For a down payment assistance, you do need to be around 620. If you aren't on an FHA, you can still get one, but there's additional fees for it. So it's kind of counterproductive. So what I like to do is I always start with a conventional 3% down, and that minimum score is 620.
Okay.
So he's got a 623. His debt to income is kind of high. It's around 43%, which, I like to teach people how to calculate that. So if you're trying to figure out where you're going to fit in, you take whatever your income is before taxes. So if you make $25 an hour, then you can do your calculation of that. And then you just divide that by all of your monthly debt, including your rent. Okay, that's where you get your debt to income. So his is a little on the high side. It's 43%. FHA, we can go up to 55%, even on a down payment assistance. That's pretty much standard. So he'd have a little room. So he has about $4,000 in the bank. That's all he's got right now. That's all he's got to spend.
Right.
So that's not going to get you a down payment. So that's why I'm like, you know what? Let's look at this down payment assistance program. I think that'd be a really great place to start.
Hmm.
So let's say that he's buying a house for 378,000. He found a duplex,
You
which
want to
is
share your screen?
phenomenal. Is what?
Do you want to share your screen to walk
Yeah,
us
I
through
certainly
that?
can. Hold on. Let me just.
And while you're doing that, these are, we're running numbers on a property in Greeley and a
Mhm,
property in Loveland,
mhm.
real properties that are for sale that have at least 2 units.
Yep.
So these are actually for sale right now, and those are the numbers we're using to run these different scenarios.
Yeah, and it would be a personal preference. We can do up to 4 units, as long as you live in it. I just want to make sure I'm very, very clear on that.
Okay,
So you can do up to 4 units. Like obviously, we don't need you going out and wanting to buy a condo development and say, well, I'm going to live in one of the condos. Can I do that? No, you cannot.
right,
Please don't do that.
right.
I honestly, if it were me and I was a first time home buyer, because you are having to learn how to be a landlord, I think 2 units is a fair start.
Yeah, so you're
Give,
living in one and you're just
yep,
renting out the other one.
yep. Um, Plus, that way you can keep, you can keep it a little bit easier as far as managing your tenants and things like that. So,
Mhm.
but that's another webinar. So,
Yes.
so we have one property in Greeley that is currently for sale, and Bob wants
Will
to put
that get any bigger, Bethany?
what?
The table,
Yes,
will
yeah,
it
I
get any
can.
bigger?
Yes, I can. Let's
I just
see.
am blind, so it's
No,
probably
it's
just
okay, and
me.
I'm looking at it in real time. So, how
Oh,
about that?
yay. Okay, that's way better. Thank you.
And then I need this little guy to go away. Okay.
Okay.
So our Greeley property currently, it's a duplex that is 378,000 list price. We're gonna, like I said, we're gonna look at a conventional to keep the numbers pretty. So it's a 3% down payment because you are a first time home buyer. You do not need to put down 5, 10, 20. You can do up to 3%.
Cool.
Your down payment would be $11,340. So
Whoa, that's a
$4,000
lot.
in the bank, yeah,
Right.
that's not going to cover that. But we'll get to all the fun where these numbers can help you out. So all this is boring. So then I used an interest rate of 6.5, which is pretty, I mean, it's pretty standard for market. The
Mm-hmm.
thing to keep in mind with a down payment assistance program is their interest rates start at a particular level. Okay, they don't have loan level pricing, it's not based on your loan to value or your debt to income ratios. This is what they offer. You can buy the rate down, and I'll let you, Christina, talk about that in a minute, how you can get some additional benefits to do that.
Mm-hmm.
But we're gonna start with 6.5, so that way you can see what those payments look like. So there's a few things we have to add in. This is your base mortgage payment, so this is just your principal and interest. And then you have your mortgage insurance, which is required on all conventionals if your down payment is less than 20%. This is not a big deal. Like I don't like my customers to get hung up on mortgage insurance because there are so many options on how to get rid of that at some point.
Mm-hmm.
Even on FHA, it doesn't fall off like it does in conventional, but there are ways to get rid of it. And if you ever want questions on that, call me and I'll tell you.
Right.
Estimated taxes, I did do the tax rate for Weld County for Greeley.
Mm-hmm.
And then estimated insurance, I was told it's a little low, but I don't want to
It's
get
in
too
the ball.
crazy.
Yeah.
Yeah, it'll work. And
Yes.
then a lot of these duplexes, they'll have an HOA. They may not have an extensive HOA, but I wanted to use something that's a little affordable. So
Yeah.
if
Yeah. So
if you
I know you padded this a little bit because this
Mhm.
specific duplex did not have an HOA, but we're trying to give you an idea of like
right.
maybe a, one that would have one.
Yep. And that's where you come in as the expert on HOAs and neighborhoods and markets. You can explain the benefits and the downsides to either.
Mm-hmm.
So the estimated monthly payment for Bob on that 378,000 duplex is $2,845.23. Before you freak out and stop listening to this webinar, let me explain what that's going to look like if you rent out the other side. So the average rent, and these are always lower. So, you would have to do some research on what market rent would be, but the average rent for this particular unit in Greeley was $1,400 a month for that other unit.
Mm-hmm.
So if you take that $1,400 from the person who's renting from you on the other side and you subtract from your total monthly payment after all the things, your monthly mortgage payment is only $1,445. I
That's
challenge you
crazy.
to go find a 2 or 3 bedroom apartment for anywhere close to that. You're
Yeah.
not going, not
Yeah.
in this area anyway, you
And
know.
and and definitely not on something that you would own.
Mhm.
There's just no way.
No, no. So that's number one. Yay, I love it. I'm already feeling better about owning a home, and I'm going to be able to put some extra money aside and build up my savings and all that fun stuff.
Yes.
So before we get into cash to close and where the down payment assistant comes in, let's say that in about 3 years you've outgrown that duplex. You've had more kids, or maybe you need more dogs, or whatever that looks like for you, and you just want something a little bigger, which most people do. They buy up. um, and you want to go ahead and keep this as a rental. So you do. Now, if you take today's market rate, which in 3 years will not be the same, it'll be higher probably.
Right.
You take today's market rate, and now you are not only paying your mortgage payment every month, but you've got a few extra dollars to put in your pocket besides that. And that's just based on today. So if the rent went up even more, then you can get where I'm going with that.
Right. Right.
So now you essentially have a home that's paid off because someone else is paying your mortgage for you.
Yes.
Um,
So I bought it. I lived in it, and
mhm,
I only had to pay about $1,400 a month to live in it because the other side was paying the other half of my mortgage, which
yep,
$1,400 a month on a duplex that you own, holy cow.
yeah,
Then you're saying in a few years, maybe you want to buy up. And so then you rent both sides, which is going to be renting for like 2,800 or a little bit more because rents probably went up. Your whole payment on that is being paid. And we're talking principal interest, property
mhm,
taxes, homeowners insurance, any
mhm,
HOA costs, totally
yep,
covered. So you own this investment property, and the rents are going to go up, the equity is going to go up, and your home's going to gain value. So
mhm,
it's making you money. This is the beginning of wealth building.
yes. Yeah,
So
and
cool.
after your first one, you start to put that, build your savings. And the reason you're building your savings is because you want to do this again and
Mhm.
again and again.
Mhm.
My boss here at Cross Country has 60 investment properties,
Wow.
and she got started in her 40s. So
Wow.
you don't have to start this in your 20s. You can start this at any point in life, and it's just understanding how to do that.
Yes.
So, it's definitely doable. And like I said, when you get your yacht, I need to be one of the first calls. Obviously, call Christina. We will be there in a
Right. We're
heartbeat,
all going to
and
hang out.
yeah, we'll high five. It'll be great. So it's a simple concept. I think people get scared because they don't realize how simple it is, but it
Yeah.
is very simple. And that's another webinar too. There are tons of programs for people that do this first, now want to build their investment portfolio. So
Right.
yeah.
So we've talked about how we can make the payment affordable. Let's
Mhm.
talk about like the 4,000 that I have in savings versus this huge big number that I'm gonna have to bring to closing.
Yep. So I'll start with what we are able to offer from a lender, and then I'll let you take the other part that's super cool that I can tell you I have that conversation with every client that I ever talk to. Okay, so as we said in the beginning, this is a down payment assistance. We're doing a 3% down payment assistance. So your entire down payment of 11,340 is paid. It's
Right.
put on something called a second lien. Now, before you freak out about that too and end our webinar, the second lien is what they call for forgivable lien. So as long as you live in the home and don't refinance it or don't sell it for 3 years or more, then that money goes away. You do not make payments on it. You don't owe it. Like, it's gone. It's basically free money for you. And it's just there as a holding, like a deposit for them, essentially, to make sure that you do in fact live in this home and utilize it as a first time home for 3 years. Okay?
So it's not necessarily a grant because grants are
Nope.
just free, but it's a second lien,
Mhm.
but acts kind of like a grant if you
Yep.
live in the home long enough.
Yep, it acts just like a grant, but we set it up as a second lien. The reason I prefer second liens as opposed to grants is, again, because the rates are significantly lower on the second lien versus the grant. But they work the same.
And on that second lien, I'm not having to pay another payment on top of
Nope.
the 2,800 we just talked about, and it's not gaining interest. So I'm
Mm-mm.
not having to pay extra, and it's not gaining a bunch of extra interest that I owe.
Nope.
Cool.
Absolutely not. The only time that it'll ever bite you in the booty, which technically it's not really a biting of any type, is if you do refinance or sell within 3 years. All that happens at that point is it becomes full due. So you would owe the 11,340. But if you're selling it, you would just include that as part of your sales price and pay off.
Cool.
So yeah, and if you refi, you're going to refi that amount in there too. So
Right.
it's not like you're stuck with this extra bill and you've got all this interest due or anything like that. So I don't want that to be the scary part
Yeah.
either. Life happens, I get it. But if you can stay in the home for 3 years or more, that's ideal.
So cool.
So I added some fees. I did some of the standard closing costs.
Mhm.
These are very, very rough numbers. So don't anybody call me and say, but Beth, you said it would only cost this much. No, that's not
Right.
true.
Right.
So I added some of the lender fees. So even with the down payment assistance, the cash to close can be anywhere between 10 to 15,000, depending on, all of these title fees and appraisals and all the things.
Hmm.
So Bob's sitting here going, but Beth, I only have, $4,000. Where am I going to get this other amount? And I said, first question I'm going to ask is, well, do you have somebody who really, really likes you a lot or even loves you a lot that wants to give you a gift? Yeah, my mom said that they had $5,000 that they could give me. Cool. So that's $9,000. So we're still short about $1,400. Christina, where can I get some of that money?
So, a lot of times, and especially in the market we're in now, where homes are sitting a little bit longer, a lot of homes that I show are vacant. So the people have already moved out and their home is just hasn't sold yet. So a lot of times, actually, in the last 9 months, I have not gotten a buyer under contract without the seller paying some of their closing costs, some if not all. So we're negotiating that for you when we're going under contract. Like, okay, seller, you want to sell your home, but it's sitting, so let's make a deal basically. And so we asked the seller to pay the buyer back some funds, anywhere from it could be anywhere from 2,000 to 20 to 25,000. Like that's really getting up there. The average is about five to $10,000 that we can usually get the seller to pay toward your closing costs. So then what does the math look like, Bethany, after a $5,000 seller paid closing concession?
Well, you can do one of two things. You can tell mom thanks, appreciate the extra money. I'm going to go ahead and take some of that money and apply it and have zero out of pocket costs.
Hmm.
And then use whatever mom gave me to maybe buy a really cool couch at Living Spaces. FYI, do not recommend. It's great furniture, but wow, it's expensive. So Marketplace, everybody goes to Marketplace.
Yes.
You can either do that, or you can buy your rate down. That's
Yes.
an option. That's something that we love to do. A majority of the time, what we do with that incentive, especially if it's a fair amount like 10,000,
Mhm.
we'll usually use a chunk of that to buy the rate down, because now your payment's even less and now you're making even more money per month because you're still able to charge the same amount in rent. Doesn't matter what your payment is.
Right.
So there's so many different options, and one of my favorite things to do is when I do have a client that wants to look at certain things like this, and well, what if I do this and what if I do that? This is the fun part for me, is I
Yes.
can plug any number that you want for me in there. So let's say I'm going to do it and do it
Yeah.
right.
Let's do a puzzle. I love
Let's do
puzzles
puzzle.
and figuring things out.
So we'll do seller incentive.
Okay.
So let's say that we got a seller incentive of $10,000.
Nice.
So even without your gift, you've got a closing cost of $445.50, or 445 even. That's, if you're lucky, that's car payment. So that's doable. Now, if you want to get a gift, so we're going to do a gift from mom because she's awesome and we love her.
Yeah, she
She's
wants you
going
out
to,
of her house, so she's
she
going to
wants
give
you
you a
to go.
gift.
Yeah. Or she wants to move into your rental. So
Right. There you go.
yeah, I've had my dad actually ask me, he's like, you should buy a rental and then I can move in next door. I'm like, or not. love you, but no. So now you have a credit of $4,555. That now there are limits to how much money you can get back on a
Mhm.
down payment assistance. So what we would do is we would take that amount and we would apply as much as possible to your rate buy down. There
Mhm.
may be a chance you have to come to the table with $100 or $200, but our goal in my job is to make sure that you don't leave any money that's owed to you, what we call on the table. That does not mean that we're actually going to put money on your table. Because I've had people say, well, you said money on the table and I didn't get
Right.
anything back. I'm like, that's not what I meant. So we don't want to leave money sitting there that we could use for something. So
Mhm.
that's what that would look like. So you could most certainly purchase a home on a conventional with nothing out of your pocket. It
Isn't
is
that so?
possible. Yeah.
Yes. And it's not only possible, it happens. Like my closing last
Mhm.
week, it wasn't an investment property, but it was a first-time home buyer buying a home. He put his earnest money down. He had $4,000 to put earnest money deposit down. Um, but we were able to get seller concessions and rate buy down because of the seller concessions,
Mhm.
closing costs covered. So he actually did get $3,000 of his $4,000 back at closing. There wasn't really anything else we could use because we kind of maxed everything out. So he literally paid $1,000 to buy a house and got,
Mhm.
3,000 of the 4,000 he put down back at closing to go buy furniture or whatever. So it's not only possible, we see it happen quite often. And
Yeah.
now this is a very inexpensive duplex, so 2 units in Greeley. We wanted to show how it's possible and how affordable it can be. Now, of course, your preferences may say, you know what, I really love this other duplex in this other area, and it's $550,000. Okay, let's run the numbers.
Yeah.
Let's see what you can afford. I'm going to get to the next scenario because it's cool how it's actually more expensive, but you are paying less. So,
Yeah. Yeah. And each pocket of, each market, whatever you want to call it, each area of the state is going to have different scenarios. So if you were to buy an older duplex in, let's say, Douglas County, rent in Douglas County is insanity.
mhm.
I used to live in Douglas County. I moved out to Elbert into Elizabeth, which rent out there is not Douglas County. So again, it just depends where you are, where your
Yeah,
pocket is, and then you can buy a house that is probably going to be a little more expensive, but you can also get more back. So
yeah,
this one was cool because when I ran the numbers, I was like, where's it? Why don't I buy this house? Like, I feel like I
right?
need to buy this house.
Yep.
So this is in Loveland.
hmm
It's a 400,000, it's a duplex too, right?
Yes.
Yeah. $400,000 duplex. So it's a little more expensive than the other one.
hmm
3% down, same thing, down payment, all the fun numbers. Where we get into the really good stuff is we did the mortgage insurance, tax estimates, all that. So now your payment's a little higher, and people are looking at $3,000 a month going, oof, that is a lot of money, especially if you're pretty limited. Like Bob, he only makes 5,400 a month. So that's not take home. So he's probably looking at that going, that's all I have. Like, I couldn't do that.
Right.
Well, you can, Bob, because the average rent in Loveland, and again, it's the lower side, the average rent in Loveland is $2,000 a month. So if my math serves me correctly, and as much fun as it is being a mortgage broker, I hate math.
Right.
So I use calculators for all the things. So
Yes.
if my math serves me correctly, Bob will only pay around $1,000 a month for a 3 bedroom or whatever duplex.
hmm
That's that is not shabby. I know for a fact you can't even get a basement apartment for that.
Right. Yes. No, I
So,
mean, so your whole payment is 3,000, that's all in.
mhm,
You're renting the other side for 2,000. So
mhm,
you're buying an investment property, living in it for $1,000 a month.
yep, all
That's
in.
so cool. I really
Yeah,
hope that this opens people's eyes to like, oh my gosh, I maybe can buy a home and maybe I can buy an investment property and then keep it going for the wealth building.
yeah, yeah. I mean, it's never too late to start, you
Yes.
know. I bought a couple first homes whenever I was significantly younger. And then I went 10 years without buying another home on my own. I was petrified. I was a single mom raising three girls, no child support. I was barely making it by. Thankfully, I have family who are amazing support systems, but I know a lot of people that don't. And
Right.
they're really having to struggle and work all these jobs. And
Mhm.
I worked a lot, and I was trying everything I could to make sure my kids had what they needed, and I put a roof over their head.
Mhm.
I was able to finally buy a new house, but I was in my 40s. In fact, it was the first house I bought in 10 years was 4 years ago, 5 years ago when I moved to Colorado. And let me tell you, buying a first time home on your own 10 years after you're used to owning a home with a significant other, with kids, and moving from Texas where the average home price in my area was 400,000 and you get like all the space, to Colorado and Parker. I had no idea what I was doing, but I
Yeah.
moved to Parker, which I love, and I got a teeny tiny little house for 550. I mean,
Right.
it's scary,
Yeah.
and but you can do it. And after
Yeah.
you do it, it's just so freeing. And it's just to be able to do this. I would have loved to have been able to do this. I wish somebody would have told me this 4 years ago. I was in the industry and never, because I worked for builders. We didn't
Mhm.
really focus on this stuff.
Right. Yeah,
I would have had a yacht by now, even in four
exactly.
years.
Well, and not only, if you think about it, it's not only for first-time home buyers starting to build wealth. It could even, just kind of thinking outside the box a little bit, like you said, maybe it's adult children in their 40s buying something that they want to live in, but to help mom or dad out who's aging, needs to be near, can't afford to really downsize into, a new home because of the interest rate they have or whatever it is, then you're
Yeah.
right there. Um, or also maybe it is an older, person, a senior who wants to downsize. They don't need all the space anymore. They only want a two-bed, one bath. Well,
Mhm.
maybe this is something they could even consider because then they have maybe some income coming in.
Yeah.
Um, I'm just trying to like it's kind of blowing my mind a little bit, all the things that
Yeah. It's
people could
not
have.
just for, young people who are just now starting out. This could be anybody. This could be somebody who has rented their entire life and now they're finally, thinking, oh my gosh, I can buy, I'm going to do it.
Mhm.
This could be for people at different stages in life. I think
Yeah.
about my dad. He makes $2,600 a month on Social Security. I
Right,
can't even afford to put him in an apartment because
right.
there's nothing out there that's affordable.
Yeah,
This would be something that we could do, that I could help him do. And then he wouldn't have to worry about income or being able to afford his mortgage. He could go move to Loveland and
right.
he could pay $1,000 a month and have, not only that, he can make a friend. I'd like to think that
Exactly.
his person next door would be pretty cool and they could hang out.
Exactly. Yeah. Yeah, we
So,
would like to hope that.
yeah.
But yeah, so and then let's look at the cash to close on the second scenario. So we're only paying $1,000 a month for it. The cash to close, we're assuming that same $10,000 seller
Yeah.
paid costs, the gift,
Yeah.
the same.
Pretty much the same. So it's the big difference you're going to see in these scenarios is going to come down because we are using a down payment assistance. The biggest thing you're going to see is the difference in payment versus income potential.
Hmm.
So, same scenario with your cash to close, you get a $10,000 incentive, and then now you can buy your rate down a little bit. And then now you may be able to get your entire mortgage payment paid
Right.
with your $2,000 a month in rent.
Right. Right.
So,
Wow, this is so cool. I mean, I hope that it gives people hope, that
mhm,
maybe never ever thought they could own a home and especially never because a lot of younger people like, my kids' age, 20s, early 30s, I think a lot of them feel like I'm never going to be able to afford to buy a home.
mhm,
And they're renting, but they're renting with two, three, four other people. So why not buy your home, keep those other people, friends you've made that are you're renting with, have them pay your mortgage.
yeah.
I mean, I think I think a lot of people are used to living with other people right now. So, do it in your favor so that someone
Yeah.
else is paying your mortgage.
I mean, if my girls came to me, the not the 15-year-old, she needs to stay in mommy's basement for a little while, but
Yeah.
if the 24-year-olds came to me and said, Mom, we're tired of renting, we really want to do this. If I could help them, I would be thrilled to do it, but they could do it on their own. I mean, I could give them a few $1,000s for a gift,
Hmm.
but there's so many options out there across the country, not just in Colorado. Texas has 3 different down payment assistance programs and they all 3 offer different things.
Hmm.
So, regardless of where you live or where you want to live, I highly encourage people to check into these programs because they are available. Now, some programs may not be able to be stacked with an owner occupied investment,
Hmm.
but a majority of them will because all they care about is that you live in the home and that it is your primary residence.
Right. Right.
And that's the big caveat. And that would defeat the whole purpose if you weren't going to live in the home. So
Right. So, I think I caught, but can we talk a little bit more about Bob? So, Bob, we talked about his debt versus his income, but did we talk about what his income was? You said like 450 something
$5,400 a month, gross.
gross.
Yeah, not take home, gross.
Okay, so this is doable if your
Mhm,
debt to income and credit scores are where they need to be. If you're
mhm,
making $5,400 a month in these scenarios we talked
mhm.
about, um, which it sounds like a lot to some people, but to some people, it's like, wow, I do make a little more than that. Or maybe I don't, but I have a sister that wants to buy with me, or I don't know what that looks like, but that's what I'm just saying. Don't get stuck in like, I don't make that much money, or I could never do this, or I don't have the down payment. I don't have somebody that can give me a gift. Like, let's talk about it. Let's fill in some
Yeah,
numbers and show you best and worst case scenarios and see where your comfort level is.
I mean, I don't want to give any personal information. I'm not going to, but there are people out there who make, let's say, 24 bucks an hour, 23 bucks an hour. You can make it work. There
Hmm.
are so many different options. If you need a little bit of time to pay down your debt, that goes back to, it's may not be a not this second, but we can certainly make that happen because that's what we're going to be able to do is to get you to that point. Let's say your credit score is at a 610.
Hmm.
That is so easy to increase like within fairly quick, within 30 days, if not quicker. There are
Yeah.
so many different options to be able to do that. I actually, long, long, long time ago, one of my first experiences with the mortgage business was I did credit repair for cross country and I just aged myself. So yes, they don't exist anymore. So, I did credit repair for them. And so I love looking at people's credit and saying, okay, if you do this and this, that'll get you 40 points like that.
Yeah.
Or if you do this and this, then we can get you 5 or 10 points if that's all they need to do. And it's fairly inexpensive. It doesn't have to cost a ton of money to pay off all your debt to get better credit. There's certain ways to do it.
Yeah, so I'll give it just an example about that. So I won't name names, but a very close person to me um, has been renting and needed to get into another rental and was kind of worried about, am I gonna be approved because my credit is actually pretty bad. So they had gotten into trouble with one of the care credit cards. So it's like a
Oh,
veterinarian
I know
card.
who Care Credit is.
Yes, exactly. So they had a very beloved animal and they didn't have the money to get it the care they needed. So they got this card, this credit card, super high interest rate, whatever. They had been paying on it, paying it down regularly. Then something happened and the auto pay stopped. And so then they didn't know that it wasn't coming out of their account. All of a sudden they were past due and collectors were calling. So the credit score just tanked, plus they didn't have any credit. Like that was the only credit they had. So then that one thing, it just makes it so bad. Well, so one of my other guests last month 2 months ago was Alexandra Ehrlich, and she literally, because somebody had told me about her, and so I called her and I said, I need your help for a family member, and myself, because see, I had been trying to help myself and this family member for a year, trying to do all the things that you think you should do to try to get your credit
Mhm.
score up, but it wasn't moving the needle. So we
Right.
talked to her. She got on the phone with us, walked us through a couple things, made some three-way calls on the phone with us to some creditors, was able to negotiate that card down. Um,
Mhm.
we paid, I can't remember what the balance was. It's over $1,000. We paid like $400 to just have it go away. Um, and then go off the credit like report. Then we added her to one of my credit cards that I've had for a very long time that has it's like $1,000 card that didn't have
Yeah.
any money on it. Added her to that. Her score went from like a 530 to like a six. Well, the bureaus report differently. One was reporting like a 671, another one 711
Mhm.
in a month.
Mhm.
So like that's not always the scenario, but don't get caught up in, oh my gosh, my credit is too low. You'll never be able to get it up there, because just ask questions and keep
Yeah.
asking until somebody has an answer or a plan for you, because it's probably doable as long as you are willing to do the work.
Yeah. And that brings, another good point. If you know that, you listen to this and you go, you know what, I am ready. I'm going to figure this out. It is doable. I want to make it happen. I'm going to call Christina and we're going to start talking about what I need to do and, all that stuff. And she's going to say, Bethany, can you handle it? And I'm like, absolutely.
Yep.
So while you're getting ready, there's a few things you can do to help yourself. Make sure, go ahead and pull a free credit report from your bureau. Take a look at it. If you notice anything on there that doesn't look right or that maybe needs a little bit of assistance, I'd rather you get in front of it as opposed to, hey, I'm going to do a soft pull on your credit or a hard pull on your credit. And then all of a sudden it's like, whoa, I had no idea that was going on. Go out to the bureaus. You can actually go online and get a free copy of your credit report. It's not going to have your score on it, but it'll show all of your accounts.
Right.
We can look at that and we can walk you through, or Christina can put you in touch with her credit repair person who would, I'm sure, be happy to take a look at that and get you prepared.
Mhm.
If you feel like you need to go to Chipotle or Chick-fil-A, maybe skip it. You can
Yeah.
make Chipotle at home. I do it all the time for my kids. So skip it. Put that money that you were going to spend on Chipotle or Chick-fil-A, put it in the savings. Start doing that a little bit at a time. You'd be surprised how much $50 a month starts to accumulate really quickly.
Yeah. Yeah.
Ask questions. If you want to ask questions about, I really need a car right now. What if I went out and got a car loan? Well, that could have an impact on all this hard work you're doing. So there's a lot of things, just being aware and understanding and asking the questions. But, you don't have to walk in the gate being ready to go and have the perfect credit and all the money and, know exactly what you're doing. That's what we're here for. We can get you to that point.
Exactly. I have one buyer that was like that, first time home buyer, and he's an engineer though, so that's not fair
Oh, well, there
because
you
he
go. Yeah.
researched everything. And I'm like, you're not really a first time home buyer, not in your knowledge, because he was
Yeah.
like, I know what I'm doing. I've done all this stuff. I'm pre-approved. And I'm like, okay, great, but 95% of the clients that I work with, they're starting from ground zero. They may not even know what their credit score is, so I think the important takeaway is that reach out to a good agent and a good lender, um, because and one of the things I always tell my first time home buyers is do not be afraid to ask questions. And if you ask a question and the professional, the lender, the realtor, the title agent, whoever it is, if they make you feel bad for asking that question or feel stupid, they're not the person for you,
Yeah.
because we work for you. We're here because we know you don't do this every day. We do. We know you don't even know the right questions to ask. So there is no stupid question, and there's no shame, especially like with people like Bethany and I who have been down the road of bankruptcy and needing credit help and, all of these things. There's no shame. So we are never going to be like shocked by your story. And those are the stories that I love the most is like I never ever thought I'd be able to buy a house. And now look, I have, I bought one and now I'm buying another one and that one's paid for. And that's where we get into that building and generational wealth. And real estate's one of the best ways to do that.
It's the easiest way to do it. I mean, you've got some people that think that they're never going to be able to live comfortably, or, in my case, I'm at the age where I'm starting to really focus on my retirement. My husband and I are not going to want to work until we're 80. And, it's one of those things where people just they don't realize how simple it is
Mm.
and how fast you can build wealth, and houses are going to be houses, even when the market fluctuates. There might be, just like the stock market, you might have something that completely tanks one day and then the next day it's back up. You have to be patient. You have to have people in your corner who understand. There's all sorts of resources for you. But this right here, this gets you started and gets you started in the right direction.
Yeah.
And if you want to buy your own house just for you because you don't want to share a wall with somebody, that's fine too. Guess what? You can
Sure.
turn that into a rental when you go do another house. You don't have to
Yes.
start with one. So,
No, and I'm glad you mentioned that because that is something I wanted to talk about because I have clients that over the last 10 years have bought 3 homes and they've kept them all. So they
mm,
bought their first home, they lived in it, they made some updates, it gained equity. Then they used the equity in that to buy their next home and on and on. So, yes, you don't have to live in a little duplex or share a wall with somebody. It might take a little longer, but that's okay. It's all where you are in life and what your goals are. And so just reach out, Bethany's information is going to be shared. You can call her directly. You can call me. Or don't call us, but make sure you
call someone,
call
please.
someone. That's it. And make sure that someone is legitimate and you trust them and you feel like you can work well with them. So anyway,
Yeah.
this has been awesome. Thank you so
Yeah.
much.
It was fun.
I learned something every day in real estate. I always tell people
Oh
that.
yeah. Yeah.
So
If I didn't learn something every day, I'd be bored to tears and I would be doing something else.
yeah,
Maybe
me too.
designing interior designer. I don't know. Maybe cows and chickens are in my future. I have no idea.
Yeah, I would just go down the podcast and computer phone game like hole, black hole, if I didn't have something like real estate to keep me focused and energized. So
And live on
anyway,
TikTok. I get it. It's fine.
I
We all do.
know. Just like, oh, sometimes you just need a break and then you feel
Yeah.
yourself like being drugged down into that like Netflix, it's three, two,
Yes.
one, the next episode starts and you're like, what am I
Yeah.
doing with my life? Get up.
Yeah.
Thanks, Bethany. Thanks so much for being on
Yeah.
and I really hope people reach out.
Yeah, me too. It's an amazing thing, and I'm so glad that you, one, asked me to help you with that, but two, also thought about it to even present it. So it's going to be out there in the interweb. We're
It's
going to
out
tag it
there.
on all the Facebook pages, guys.
Yep,
So,
it's out
if
there
you
now.
don't find
So
it, that's on you. Can't help
that's
you.
right. No excuse, no excuse. Like running through those numbers on two actual properties that are for sale right now, as
Hmm.
of this morning.
Hmm.
I feel like that should give people hope and open their eyes to like, oh my gosh, this is something that I might be able to do. So
Yeah, 100%.
I'm excited.
Me too. Me too. Well, thank you very much for having me. It was really cool.